Welcome to Japan Web3 Weekly, presented by Wakano. I'm Keisuke, CEO of the company. This is the 36th episode of Japan Web3 Weekly, your source for the latest updates on Japan's Web3 market every Sunday. This week, two major developments are shaping the future of digital assets in Japan. A game-changing reality shift that could bring insider trading rules to crypto, and a major stablecoin initiative led by SMBC Group. Let's get into it. First, Japan's Financial Services Agency is preparing a major legal reform that would bring crypto under the country's Financial Instruments and Exchange Act, introducing insider trading regulations for crypto assets according to Nikkei. Currently, crypto is regulated under the Payment Services Act as a form of digital payment. The FSA now intends to classify it as a separate type of financial instruments, which would legally restrict trading based on non-public information. This change is driven by the growing investor base. There are now over 12 million crypto accounts in Japan, almost 10% of Japan's population. The goal is to prevent unfair practices and improve transparency for retail. Examples of what could be restricted include insiders at exchanges or issuing companies trading based on undisclosed listings, partnerships, or technical developments. The FSA is also considering disclosure requirements, not as strict as those for securities, but enough to ensure users have access to relevant corporate and transaction data. In addition to insider rules, investment advisors promoting crypto products would also need to register under the revised law, much like securities brokers today. This aims to curb fraudulent solicitation and increase legal accountability. This reform would also open the door for tax changes. Currently, crypto is taxed as miscellaneous income, with rates up to 55%. But the 2025 tax reform outline mentions the possibility of moving to a flat 20% capital gains tax if investor protection laws are strengthened. The FSA plans to finalize the details with a policy advisory group this summer, and aims to submit a bill to the Diet by 2026. Second, SMBC Group has announced major collaborations with TIS, Apple Labs, and Fireblocks to explore the future business use of stablecoins in Japan, with the aim of launching as early as fiscal year 2026. The group signed a memorandum of understanding on March 21st and publicly announced the initiative on April 2nd. The goal is to jointly define requirements for issuing and circulating stablecoins that can support wholesale financial transactions between institutions and enterprises. But this isn't just about experimental trials. The parties explicitly stated they are aiming to develop real use cases that can be implemented in ongoing operations. They also see stablecoins playing a key role in settling transactions involving real-world assets, such as government bonds, corporate bonds, and real estate. This move follows Japan's regulatory reforms under the amended Payment Services Act, which took effect in June 2023. The law now allows the issuance and circulation of fiat-backed stablecoins and a license called Electronic Payment Instrument Service Provider. SBI VC Trade was the first to obtain this license and launched public USDC trading last month. With SMBC entering the space alongside top-tier tech partners, Japan's stablecoin infrastructure is evolving from pilot projects to real-world financial applications. If you'd like a deeper dive into this topic, we've covered earlier stages of Japan's crypto regulatory overhaul in previous episodes. Check the description for the links to those videos. That's all for this week's Japan's Web3 Weekly. Wakado supports global Web3 projects entering the Japanese market as an interim country manager and assists startups and VCs in fundraising within Japan. If you're looking to expand your Web3 business or raise capital in Japan, we're here to help. See you next week.